Hello, everyone, and welcome to the HUBB U.S. Market Update. Another positive week for markets. So we're going to welcome Rob Roy, the Chief Market Strategist at Elliott Wave Options, to run us through what's happened this week. Welcome back, Rob.
Thanks, Dux. How are you this evening?
I'm fantastic. I'm looking forward to a great weekend.
Sounds good.
All right, and now also, everyone, while we're watching this show, don't forget that Rob's going to be using HUBB software. And that's the charting software that he uses for all of his analysis, especially the focus on the Elliott Wave options. Check that out at hubb.com, which you'll see down here below. Now, despite CPI and PPI data this week threatening some volatile moves, it didn't really eventuate. The market finished in positive territory, and big bank earnings have kicked off earnings season for us. So let's hear what Rob has to say about that. Don't forget, we're here every Friday at 5 p.m. Eastern Standard Time. Rob breaks down the US markets for us. He looks at the Dow, the NASDAQ, the Qs, and this week he's going to be looking at CPI, PPI. Also going to touch on the ECB for us there as well. Also, we dig into his stocks of interest, and we're going to be looking at JP Morgan, Boeing, Nvidia, Amazon, and silver, which seems to be a hot one at the moment. Don't forget to get those questions together for Q&A at the end of the show. Great questions have been coming through, and we really enjoy having them come in. Before we get started, don't forget to click on the subscribe and like button below. Well, the numbers keep growing each week, and we'll be here every week talking to you. All right, Rob, let's look at the US market summary for us.
Hi, everyone, and welcome to this week's US market update. Taking a look at the chart of the SPY, you can see that bit of a move to the downside today after kind of rocky back and forth, but still making higher highs throughout the day. So the trajectory is still to the upside. I know based on last week's broadcast, the fact that we're talking about the market going higher, there's a lot of people that are expecting it to go to the downside and aren't in agreement with the move to the upside. But the market's doing what the market's doing, and we're just here to read the charts as we see them. So, but what ended up happening today or this week is as we move to the upside here, you could see this downward move that occurred on Wednesday, and that was when the CPI report came out. Brandon, perhaps you can post that headline on the CPI, and you can see that it did come in a little bit better than expected. And the market kind of brushed that off and went to the downside, and there was a lot of commentary on the financial networks. Well, if inflation is slowing as the Federal Reserve wants, why didn't we continue back to the upside on what was perceived to be is pretty good news on the inflation front? But that's the consumer price index, and I think there was still a little bit of doubt left in there. This is just my opinion on waiting for the PPI report, which came out on Thursday. And the PPI report on Thursday comes out. It's also, I think we have a chart there as well, Brendan, also came back to better than expected, lower inflationary numbers, and the market turned and rallied back to the upside. So the exact opposite of what happened on Wednesday. Why the difference with these two primary inflationary reports, both kind of in the same area as far as slightly better than expected? My opinion, for whatever that's worth, is the doubt that was left after the CPI report is they still wanted to see the PPI. What are prices at the wholesale level? Because if wholesalers are still having to pay more, if inflation is still hot on the wholesale level, but the consumer price index is coming down, perhaps the consumer is backing off a little bit, tightening the belt strings, maybe not spending as much, and so prices have to come down, that compresses margins, which would affect earnings coming into the earnings season. So I think there's just a little bit of, okay, let's wait and see how this wholesale price level comes out. And then there was some relief when it showed, okay, it's down as well. Now, we still had the Fed governors coming out and saying, yeah, it looks better, but we're not done yet. And they leave that open-ended. Like, well, what exactly does that mean? Does that mean more rate hikes? Or does it mean we're going to continue and pause a bit and see what happens with the rate hikes we've already put through? No real commentary along those lines, just, yeah, it's better, it's moving in the right direction, but it needs more. So there was some lack of clarity, I think, and, you know, that is the Federal Reserve's MO, has been for a long time. So that leads us into today, and today we will talk about JP Morgan's earnings later on. A lot of people were looking at that, and then we had a pretty good open, big rally. immediately sold off, then a little bit of a tick back to the upside to end the day. But as you can see, that we still finished above the 10-day moving average and holding and closing above 410, which we've been talking about this level for the last couple of events here. Ducks, where the 410 level, I think, is an important level. If we can hold here and move back to the upside, then I think we are in line for this zigzag pattern, which I know some of you are not in agreement with. You've made your voices heard loud and clear on that. But again, we're just reading the charts and showing you what they say. And this zigzag pattern with the 100% fib extension up there around 435 or so. And then we also have within that C wave, another zigzag pattern where we could move up into 425 or so. And it is all very classic for the, I honestly view that if people have not had good success with Elliott wave, perhaps they haven't taken enough time to really learn. It's a very intricate system. It's not as easy as just 1, 2, 3, 4, 5 followed by ABC. There's a lot to it, and nothing worth having comes easy. And it's a very complex system, and I think that's why it works. So right in here, we had this downward zigzag. I don't want to re-go through and draw it because we talked about it already. So that means this was a complex C wave. All this stuff is very classic from an Elliott wave Fibonacci standpoint. So perhaps if you're not using Elliott wave, have another look at it. This is an amazing piece of software that is programmed exactly from the algorithm that Ralph Nelson Elliott himself wrote. So straight from the horse's mouth, if you will. But getting away from this, because we've showed this zigzag pattern so many times, the key here is we've held above 410. We'll see how we move into next week as we move into earnings season. That's going to be a big key. Obviously, there's a lot of expectations that perhaps we're going to see some not so good earnings. We're going to see the start of this potential recession that people have been calling for, and that the inverted yield curve, which is still inverted, although not nearly as bad as it has been. I'll bring up the chart of the yield curve real quick, and you can see that it's still inverted, but the 2s are down here and the 10s are here, so it's not nearly as bad as it once was, but it's still inverted. And perhaps as the earnings season plays out, we're going to start to see some effects of a consumer maybe not spending quite so much, and the fact that we're going to begin to have a little bit of a recession, if not a more significant one. A more significant one, I think, leads the Federal Reserve to perhaps have to cut rates sooner than they'd like to. And then last but not least, when you take a look at this, if you're just looking at the chart without any of the Elliott wave patterns, etc., you can't help but notice that there's a pretty decent looking ascending triangle set up there. So 410 being the area of resistance, and then the significant set of higher lows as we move up towards this 410 level. It's a large triangle. So I think that bodes to the fact that something of significance is likely getting ready to happen. All right, that's enough on the S&P. Let's take a look at the VIX, and we'll look at some of the other indicators and markets. And you can see with the VIX, we have broken down below these levels here, 18, 19. And if you are bearish, then that's something that would concern you. Literally closed at 17 and change here, as you can see today. The winding of the spring, if you will, with breaking below those levels, and the fact that we could get this big explosion back to the upside on the VIX, I think is keeping a lot of bears and shorts feeling like, okay, the market hasn't been going our way yet, but it's coming. Look at the VIX breaking below here. Can it go lower than this? Well, yeah, it's been down to 16, it's been down to 12, even broke below 10 in recent years. However, more recently, 18 or 19 has acted as support, and you have to pay attention to that. And the fact that we're breaking below that level, is that stretching the rubber band, winding the spring, whatever analogy you want to use for a potential explosion back to the upside, which could be set off by worse than expected earnings, and earnings, I think, are already not expected to be great. So there's a little bit for everyone here, I think, in the market. If you're bullish, the patterns look pretty solid. Volume's been pretty good. If you're bearish, you can certainly hang your hat on that VIX is really low, and the likelihood is the VIX is going to be moving back to the upside. So, there's good arguments for for the weekend cocktail hour, regardless of what side of the aisle you're on. And I just want to say that, you know, when people make comments, and we love your comments here, we love your questions, etc., on these, but let's keep them all respectful of each other. Disagreements makes markets. I mean, if everybody viewed the markets the same way, we'd have no markets. So having differences of opinions is what makes the market so exciting, I think, and it's what makes them work. So, you know, let's not call each other names. Let's have respect for each other's opinions, and, you know, look at the markets as we see them. I think that's an important thing. Looking at the TNX here, bouncing back to the upside on interest rates, I think that's interesting. Just when it looked like we were going to maybe have an issue here, breaking below 34. I didn't like that, as you know. I was concerned about not just that, but the fact that it kind of went boom, straight down through it. I didn't want to see rates drop significantly to the downside on this vertical move. And the reason for that is that would indicate a lot of money coming into the bond market. Where's it going to come from? Probably from the equities market. You know, another argument here to the long side of the markets is there's a ton of money in money markets. So that's got to go somewhere. Is it going to go into the equities market? Is it going to go in the bond market? I guess we're going to find out here over the next couple of weeks by the look of that big ascending triangle on the SPY. But the fact that we didn't continue down here, you know, price and yields moving opposite directions in bonds. So there's not money, at least not right now, flooding into the bond market, which leaves room for money to move into the equities market. I think that's key. And then we look at the dollar. And Dux, you mentioned that SLV has been hot lately, and we are going to look at that chart here, not too distant future. And here you go. The dollar weakening here has put a bid under the metals, so I do think it warrants taking a look there. So they're looking at the dollar moving to the downside. That's pretty key. So let's take a look at some of our other indices, and we look at the DIA and to see if it's moving back, and it's run into resistance there at 340. Put the Elliott wave pattern on. No 5-wave pattern there either. So neither the SPY or the Dow has a 5-wave impulse pattern. They're in corrective mode. And here again, you can see there's a zigzag pattern to the downside. Then we had that little triangle right here. And then we broke out and we've run right back to resistance. And so this is a very logical point, in my opinion, for the Dow to pause. We had gotten a little bit overbought, a little separation from the 10-day moving average. So with that, go sideways, let the 10-day moving average catch up, and then maybe we take a run at breaking above 340. If we do, I think we're off to the races on the Dow. I mean, that's clean air, the racing analogy. You know, when you're running out front, you're in clean air, your engine performs better. When you're in the middle of the pack, you got everybody else's hot exhaust and tire things hitting your engine, and your engine runs a lot hotter, tends not to perform as well. So getting in that clean air, you break above there, I think we could really have something, but it has to do it. And there's a lot of resistance at this 340 level from November, December, and January and February as well. So here we are right back to that level. And is there a possibility that 340 holds and we move lower? Of course. It's got to break that level before you get too excited about a move to the upside. So I think if you're a fan of trading the Dow, you're simply sitting on your hands, and let's wait. Let the market tell us where it's going to go. There'll be a great trade to be had, whether it's to the upside or the downside. And then we take a look at the Qs, and okay, the Qs cooled off a bit, but you could make an argument that, yeah, they've gone sideways here after a really nice run. They're allowing the 10-day moving average to catch up. We did close back above the 10-day moving average both yesterday and today. And I go back and remind you about rates. We've actually had a tick up in rates here towards the end of the week, and yet the Qs have hung in there pretty well. So I think even though nothing too exciting out of the Qs this week, constructive at least that we have held above the 10-day moving average, above that previous wave 3, and we're trading just below that wave 5 target. So a little calm before the storm, perhaps. Could that be the end of the wave 5? It could. It's gone 67%. That could be all it gets, and then we start to move down towards the previous 4, which would bring the Qs all the way back down towards this 280 level. So I think you have to watch here too. So I think the prudent thing, my conversations have been cautious optimism, is what I've been talking about. And we've talked a lot about this in TradeFinder. And Brendan, I know I'm probably throwing you off a little bit here, but if you wouldn't mind putting up that shot of TradeFinder, I'd love to have everybody take a look at this and consider joining with us, because cautious optimism is what I've been talking about for the past couple of weeks, and we have really come up with some great case study considerations, we call them. We look for trade ideas during TradeFinder. We do it every Tuesday night at 9 p.m. Eastern time. We talk the markets, we look for trade ideas, and we have a live Q&A at the end. It's a lot of fun. It's free. So sign up and join us for next week's TradeFinder. But that has been the theme of our recent TradeFinders, is cautious optimism, and I think that's prudent. I think that's where we stay with things. You have to respect where the charts are, but you also have to keep in mind is precarious, right? There's a lot of things, earnings coming up. Is there going to be more bank news? Warren Buffett even came out and said he didn't think we're done with bank failures. The Fed's lending facility, I believe, has really softened that. We talked a lot about that in this week's TradeFinder. I think, my opinion only, that we would have had a lot more regional bank failures had the Federal Reserve not done that. We don't know how many banks have gone and taken advantage of that and borrowed money from that lending facility, that window opening, and allowed them to shore up their balance sheets without divulging, hey, we're having a problem or we need to do that. We don't know. We don't know how many have taken advantage of that. And so I think they helped it along those lines. So that expanded their balance sheet. And with that, that's been helpful to the markets. So yeah, it's an area of time here, I think, where you just have to go with what you see on the charts, but be very cautious regardless of what you're doing, that things could turn in a moment's notice, especially with the VIX at 17. So looking at the IWM, moved back down today, but we have moved back up off that 170 level, getting up to 180. But look what happened. We hit the 50-day moving average on the high. So at least we started to put a little distance away from 170, where the IWM had not been following suit, had not been playing well with the rest of what was going on in the markets. But talk about playing well. Let's look at this chart here before we get into some of the other foreign markets. How about Bitcoin? And we were having a chat amongst ourselves about this beforehand. Just nice move to the upside here on Bitcoin. Extremely impressive, in my opinion. I've noted many times that I don't like it when things go vertically to the upside, but if there was ever a chance for a vertical move to hold, because I believe that vertical moves often get retraced, more often than not get retraced, but to go sideways for a couple of months and then we go into this really tightly formed triangle. What does the triangle do? It breaks out, and the breakout was to the upside, where it could have easily been back to the downside, in my opinion, and filled some of this vertical move, but it didn't. It moved higher. So is next stop 32,000? I think it is. Is this the start of the rally that's occurred the last 3 times Bitcoin has gone through one of those halving processes, which we expect to happen at the first quarter of next year? Historically, that's what's happened. So maybe that's underway. Again, cautious optimism, because I think you got to keep in the back of your mind now, not just this one vertical move, but now we have another one. That happens out of triangles, so it's not a surprise that it went vertical again. But boy, enjoy the ride if you're long Bitcoin or the currencies. But again, be cautious of things could snap back in a relatively short period of time. So just a couple international markets, and then we'll move on here from the charts. We're going to take a look here at the EWA, and the Aussies came back just a little bit today, had been making a nice move to the upside, but we talked about this last night in our insiders meeting, which is for our subscribers at ewotrader.com, subscribers only on Thursday night, and we were a little bit overbought on the EWA and said, hey, a rest or perhaps a little bit of move back is likely in the cards, and that's what happened. But see, we're still above the 10-day moving average, even on the move lower. And we do have a really nice zigzag pattern formed here. We also hit the 61.8%. Fibonacci working again, 61.8% fib level. And then with this 61.8% B wave correction, you would think that the EWA ends up around 24 is where you would expect that move to occur. And then taking a look at the EWC for our friends above the border up north, and you can see that held in there really well today and still above the 10-day moving average. So we are a little bit overbought on the EWC, and we're also nearing a major point of resistance. So here, I think some caution if you've ridden this move to the upside. Enjoy that. But I think, there's a lot of overhead here to get above 36. We'll see how that plays out. But when you take a look at this zigzag pattern there, that should go to 61.8, and look exactly where the 61.8 is. So you get a 38.2% B wave correction. You're supposed to go to 61.8. Happens to be exactly at 36. How about that, Ducks? Can you nail that anymore? That's amazing that fib level lines up exactly with resistance. So I think caution on the EWC as well. The INDA, this move to the upside has been pretty spectacular, just straight. I love the 45-degree angle, but way above the 10-day moving average. So overbought here as well. Little pullback as normal. The key here is we need to hold 40. So if you like the INDA, if you're long the Indian market, you would love to see this hold 40, because you have to respect the fact that we still have a qualified 5-wave to the downside pattern. So perhaps this move from the 3 to the 4 was nothing more than the wave 4 correction, and then we're going to head lower. That's still got to be in the back of your mind. We'll find out a lot about that by how it handles 40. If it breaks back down below 40, breaks back down below the 10-day moving average, perhaps we're heading down here towards that wave 5 low. But if it can hold 40, then perhaps we can hold this, bounce up, and maybe disqualify this 5-wave pattern. It looks really good. And then our friends in Germany that have been really flexing here lately with their market, and who can blame them? This I thought was really impressive. This is more like how things usually go. You had this big vertical move up and then consolidation. Then we pulled back. So there's the give back of some of that vertical move, which I note that happens so often. That's why that's in the back of my mind on Bitcoin. It just does that a lot. As exactly what happened here on the EWG, and held the top of the wave 3 exactly where you would expect it to hold, and it's turned and run back. We've made a new wave 5 high. Note that it did not label a new pattern. This is a continuation of the wave 5 before. Just a spectacular looking upward pattern on the EWG that could go as high as 100% extension. But yeah, very impressive move there. So, all right. Ducks, I think that's it for talking the markets.
All right. Listen, that was an extensive rundown. That was great. Listen, keep the questions coming in. There is a lot of questions. I'll try to get to as many as I can, but just keep them coming in. We really do appreciate them. Now, Rob, stocks of interest for this week. I know you're going to kick this off with a bang. What have you got for us?
Well, yeah, bang is exactly the way it's worded here, with JP Morgan running significantly back to the upside here. And a lot of people, we talked about that in our insiders last night as far as what was going to happen with JP Morgan with their bank earnings. And had there been disappointment here with you could argue that they're the biggest of the big. Some may argue that. That happens to be my opinion. I think they're an extremely well-run bank. There's a lot of other stuff we can get into, but I was really interested to see how this played out, and they just nailed it. They nailed the earnings, and they cited the higher rates has been helpful, and big move to the upside, which is what led into that early rally, on top of the fact that we had news come out on the ECB. I believe, Brendan, you may have a chart there as well on the ECB. They're also talking about pausing on rates. So we've had Canada that paused, then Australia's paused, and now the ECB is considering pausing. Is the Federal Reserve going to do that? Could that be the catalyst that moves to the upside? Or are they the outlier with all the rest of the world pausing? Does the Federal Reserve continue to raise on May 3rd? And that upsets the apple cart, and that's what starts to lead us lower and creates a spike in the VIX. You can see both of those scenarios playing out. So how the Federal Reserve follows what these other central banks are doing, I think, matters a lot as we move forward. But yeah, you're right, Dux. That's a pretty good move to the upside. Unfortunately for me, it gapped up. I don't like gaps. Gaps at some point get filled. They don't always automatically or immediately get filled, but based on significant research, 94% of gaps eventually get filled, but it could take time. And so some get filled right away, some don't. So what do you make of that with the fact that not only did we have the big gap up, we did come off a lot of support there at 130, but we're basically already at resistance here at 140. It's kind of no man's land for JP Morgan, but it certainly, I think, it calmed the markets a bit to start off the trading session until that move got sold into. But yeah, that's the definition of a bang there. That's pretty impressive.
Okay, so we can go to another side of this now. Boeing, who had positive news last week when we were doing the show, and then this week they decided to turn around with negative news. How does Boeing look?
Yeah, how about that? It's this week-to-week type of thing here. You have to wonder, how much they knew, how much that was playing, because the news that came out was that they're having trouble with one of their suppliers, one of their parts suppliers, and they didn't get super detailed on what the problem is. So we're kind of left to figure out what all that means. But yeah, turn around, right back down. And right when Boeing needed to be able to break higher here, right? They needed to be able to break through this area, really above 220, I believe is what we were chatting about last week. And then you're probably off to the races with Boeing. Not so fast. Now we're back down here and we're looking at the exact other side. As you said, Dux, now we got to see if we can hold 200, which is going to be very important, equally as important. And so between 200 and 220 was kind of no man's land here with Boeing. So no break above 220. Now we don't want to break below 200, because if we do, then there's a little congestion right through here between 180 and 200. But there's that vertical move that occurred between 140 and 180 back the end of last year that could be in danger if we can't hold 200. So that's a big if, because we didn't break it today. So we closed right at 200. So we still have the opportunity to hold this level, regain some things, and try to move higher. I think the market's going to want to wait for a little more detail on exactly what that news is. But yeah, good call on that one, Dux, on just a major flip-flop, fish out of water. There is what Boeing reminds you of right now.
All right, one name that everyone continues to talk about is NVIDIA.
Yeah, that's all over Twitter today, as always, and it's hard to argue with. It's been a powerhouse with that move to the upside. Has just been amazing. My own son is a big, huge fan of NVIDIA, and we talk about it all the time. So NVIDIA is always on my radar screen. Pretty impressive hold here above 260. So it made this nice run that we've had. We do have this wave 4 projection here, but remember when the software shows this, because this confuses people at times, it doesn't mean the wave 4 is underway. What this projection means is if the wave 4 were to start, that's where you could expect it to find some support. It's still colored green. Note that the other waves that are finished are colored purple. You can change those colors if you want, but it's telling you the wave 3 is still the current wave. So we're still in a wave 3 with NVIDIA, and holding above 260 is really impressive. There was, all over the financial networks, people calling for it's way overbought. NVIDIA needs to come down. It had this big run up here from 240 to 260. I think we could have seen a move down to 240 and tested that 50-day moving average and been fine. I think we still could do that if NVIDIA doesn't hold 260 and comes down. It's got a lot of support, not that far behind at 240. But right now it's trying to hold 260, although it is below the 10-day moving average. So NVIDIA looks good, pretty impressive consolidation here following that a bit of an almost kind of a what would you call that? A triple top? Would you call that a weak head and shoulders pattern? But you can see there that it does look like something is getting ready to happen out of NVIDIA, but it's not a lot. It's just 20 points. And is that the move from 260 to 240? Or is that the move that goes from 260 and breaks back above 280? So yeah, NVIDIA just continues to impress.
Let's have a look at Amazon. They have earnings in a couple of weeks, so it's a good time to look at it.
Yeah, and kind of a bit of a doji today on the chart. So we've had a nice move to the upside here. We actually have a strangle on this for our alert subscribers, and you can see the breakout from the triangle, the test of the breakout, and then we've been moving back to the upside, albeit when you have a breakout and a test like this, which is I usually talk about, there's three primary ways that stocks can break out of triangles. One is this, where you break here and move back, and the other one is you just kind of take off out of a 45-degree angle, and then the other one is you can get a vertical breakout which gets retraced. You don't necessarily want those vertical moves, and here's a perfect example of it right here on Amazon. That vertical move, what happened? Didn't hold, came back down. So you don't really want to see that one. But with this, you need to have it start to power back to the upside. It is above 100, and that's key. So I think as long as Amazon stays above 100, you can stay constructively long there. But as you said, Dux, with that earnings on the horizon, everybody's going to be watching that. There are signs in the retail sector. You probably have noted or heard on the financial networks that some retail sales have been not so hot. So is that going to affect Amazon? You know, one of the biggest consumer stocks that exists out there. Very well could. So again, some caution I think is warranted on Amazon into that earnings report.
We touched on silver earlier. Let's have a look at the chart.
Right. Yeah. When you brought up silver before, and thought about that when we went up and looked at the dollar, and you can see with this movement to the downside here in the dollar, as long as the dollar stays weak like that, I think it's going to keep a bid under these metals. And so you look at silver, we had gotten overbought, big move up. So we came back down today, no doubt about that. But again, we came down from a very overbought condition, noting that even on the move lower today, still above the 10-day moving average. So we didn't even fully correct the overbought condition. We are getting in the neighborhood of that wave 5 target, but it looks like there's more upside to go. In fact, if we can hold 23 here, this could be a good entry on SLV to turn and move back up towards that wave 5 target above 25. The key will be, can it hold 23? If it doesn't hold 23, then it's certainly coming back down to all this area here of support at 22. You know, it held at the end, the end of last year, beginning of this year, and we moved down, caught itself, turned and moved back to the upside as the dollar began to weaken. So yeah, pretty interesting movements there, and this could be an opportunity, I think, if you watch SLV and see if it holds 23.
All right, let's move into Q&A. And before we do that, you can do this on Tuesdays on TradeFinder at 9 o'clock Eastern Standard Time too, right, Rob?
Absolutely. Every Tuesday night, 9 p.m. Eastern Time. We do have a live Q&A there as well.
All right, listen, I missed it this week. I apologize, but should be tuning in next week. Trust me.
No worries. We're there every week.
Okay, there is so many questions here. Thank you so much. Don't forget to click on subscribe as well. We're going to start here with Tesla. Now, usually you touch that during the week, but Tesla earnings are next week. We got people asking whether they should be buying puts, buying calls. Like, there's a lot of back and forth here on Tesla. What are we thinking here, Rob?
Well, I think that the way you pose that question is exactly what's represented in the chart here. What should we do, calls or puts? When you look at the chart, you can see we have the 10, 30, and 50-day moving averages all converging at the exact same spot. So let's take those off. And then the 180 level that we've been talking about here recently has held so far. And mentioned that as long as Tesla stays above 180, you can stay constructively long to the upside, in my opinion. But a break of 180 changes the game dramatically, because we had this vertical move up from 100 all the way to 180. A break of 180 and you could get a significant fall in a short period of time. I know all the lovers of Tesla don't want to hear that, but it's possible. And then to throw in just the indecision that I believe is in the mix here, which is the way you pose the question, is that's a pretty decent looking symmetrical triangle that we have here on Tesla. So I don't think we're going to have to wait too much longer to figure out what happens from this 180 level. We've been hanging around here for a while, a little below it in March, a little above it the end of March and early April, and we're right back there. But that's a decent looking symmetrical triangle. So I think Tesla makes a significant move. Perhaps should I buy a call? Should I buy a put? The answer is yes on both. Maybe consider an out of the money strangle, which is the way we like to do them, with an ideal delta on the call and put, and then you don't care which way it goes. It's a decent sized triangle. So I think we're going to see, about a 60-point move out of Tesla. No way to know which direction, in my opinion. I know you can say, well, you got the Elliott wave pattern on there. It's calling for a wave 5 pattern to the upside. So it's calling for, but look, the 5's not there. And if you really get into reading the works of Elliott, he would say that a triangle trumps everything. A triangle can break either direction. Don't get caught up trying to pick the direction of the breakout based on what the Elliott wave pattern may show. If it's a triangle, it can go either way, and you need to respect that. So whether you do something like a strangle or just wait for the breakout and then trade the directional move following the breakout, I think that's the prudent thing to do here with Tesla. It was surprising that there wasn't more chatter wasn't as talked about. We had JP Morgan and other things to talk about today, but usually Tesla is top of the list on Twitter every week.
Yeah. Well, Bitcoin usually moves with Tesla, right? Like there's a very strong correlation in the chart. But we've got a question here on Ethereum. Now, I have to look over here to make sure I get it right. Chappella happened on Wednesday at 6:29 p.m. I am not a crypto expert by any means, but people want to look at the Ethereum chart.
Yeah. Pull up Ethereum.
ETH, yeah.
Yeah, but I thought we had. Yeah, see that we have. I believe it's ETH USD is how it's done. I'll come up with it in a second.
You can look at Bitcoin in between as well if you want.
All right. Yeah, we looked at that one earlier, but I'll bring it up again. I'll look up our resident guy that loves Ethereum.
Noah's saying it's ETHE, and Elliott Wave saying it's FXETUS.
That one might be it. FXETUS. Very good. That is it. So
see, everyone coming in to help.
Yeah, love it. I am not one of the guys that trades in the crypto world. I recently stepped in and bought a little Bitcoin, but just because of that historical situation on going into the halving. But you can see the move there, so impressive on Ethereum. And this is the kind of chart that I like. I've talked about the ones that I don't like with the vertical moves. That was really impressive. Out of that 45-degree angle, we had a bit of a diagonal. Some people call that a pennant pattern. Looks like a baseball pennant, but it's a breakout pattern that a lot of people look at. And there's the breakout. Clearly, Ethereum breaking to the upside. So big move higher here on Ethereum, moving up to the 2040, 2080 level. How far can we go on Ethereum? It's just pretty impressive, the breakout move. You brought up a good point, Doug, on, because of Tesla's relationship with Bitcoin, there tended to be a pretty good relationship there, but Tesla certainly hasn't moved with the movement of these cryptos, has it? So no. Is that going to, is it going to be an upward breakout of that triangle on Tesla because of this? It is interesting that hasn't really moved more than it than it has. You have MicroStrategy, right? That, you know, basically whatever crypto does, MicroStrategy does, because they're so big into the crypto world. But Tesla hasn't really reacted that way. But anyway, there's your move on Ethereum. And we look at the 10-day moving average, and you can see that tiny bit overbought now. So maybe a little bit of rest in here. But I like this chart a lot better than I like the one of Bitcoin, because this is more of the type of pattern. When I say that, when you move in a 45-degree angle, nothing goes straight up or straight down. There's impulses and corrections. That's the crux of what Elliott wave is anyway. So there's always going to be corrections of impulse moves. And if the impulse is to the upside, as it is on Ethereum and Bitcoin, the corrective moves tend to be less severe when you have more of a 45-degree angle move. The more vertical the move, the more severe the corrections are. So I really like the chart of Ethereum. I think this is extremely impressive. I like it even better than Bitcoin, as I said. Yeah, it's hard not to like what's going on with Ethereum right now, for sure.
Let's go to a couple more stocks that are floating through here. There's some technical questions coming through, and I'll try and get to those at the end. I think a good one to look at is from Ren, Schwab, SCHW.
Yeah, a lot of people have been looking at that lately, and you know, they got caught up in the fact that because Schwab has a bank, you know, so they got caught up in the whole banking thing. So you see this big move to the downside here as they got caught up in that banking climate, and the, you know, with the SVB and Signature and all that kind of stuff. But why haven't they bounced? You know, the chart is almost exactly like the regional bank chart, you know, XLP. So, you know, it looks like they're just holding here, but it's interesting, and it feels like there's a concern there that there's going to be more negative banking news coming out. And that's when I mentioned the Federal Reserve with their credit lending facility that they opened for you know, regional banks. Did they stop it, or did they just help it from being much worse as it would have been? So Buffett seems to think we're going to hear more failures, that, you know, it didn't quelch it altogether. Certainly helped it, made it better, widened their balance sheet, did all those things. But is the breakout of this triangle going to be to the downside? Would Schwab really break lower than that again after this huge move down from 80 to 50? That would be hard to imagine, but nobody is really stepping in. You know, isn't that interesting, Doug? So we've got this big move down. Nobody's really stepping in and buying this stock right now. It's just going sideways. So I think this is another one that you have to wait and see. If you wanted to be super aggressive, I think you could say, hey, it's held 50. We'll take a look at maybe a potential oversold bounce here. But 50 is your stop, because a break of 50 and you could have a big move lower as well. So
yeah, and Will's beating me to the punch here, but they've got earnings on Monday mornings, as a heads up.
Okay, Monday morning, then that may very well be the breakout of the triangle. So
Ren's actually commented on the Catalina's question from earlier, and it says, if Elliott works as a daily fractal, meaning are the waves within a day that would act as microcycles, or can only be used on a daily chart versus intraday?
Outstanding question, and it can be used intraday on live charts. The way I look at the market, I look at the E-mini futures on a 3-minute chart, and the patterns show up all the time. You have the exact same patterns, whether it's a 3-wave zigzag, a 5-wave Elliott wave pattern, the corrective moves, triangles, the breakout, all the patterns that we talk about on these daily charts with the end of day data. It all works the same on intraday charts. So currencies, commodities, any of those, the more liquid, the better. That's always been the key on Elliott wave, is the more liquid the issue. In other words, the greater the sampling, the way I look at it and the way Elliott explained it, the more accurate the algorithm is, because basically that's what it's analyzing, is the behavior of people, whether they're buying or selling, what those habits are, and what's likely to happen in the future based on what's happened in the past. That's really what it's doing. So the more liquid, the better. My personal favorite stock, the one that I've had the most trades on based on Elliott wave since I began trading Elliott wave in 2001, is Google. You know, pretty liquid stock. And for whatever reason, Google shows up with LA wave patterns all the time. But that's the general thing to remember. So if you're looking at something intraday, but it's kind of an obscure signal, it doesn't have a lot of volume, you may not find LA wave to work as well. But if you're looking at something like the E-mini futures or something that trades heavily, as I do, you'll see that those patterns show up all the time. But that's a really good question.
One we should look at, because Buffett was on CNBC, I think, on Wednesday. And we've had this question a couple of weeks ago from Alpha Oscar, Oxy, OXY.
Oh, on Oxy Patrol. I thought you were giving me the name. I apologize. It's stock symbol OXY. So I was like Oxy or Aussie, but yeah, looking at here, and yeah, he's just, we joked about, load the boat, back up the truck, whatever the favorite analogy is. That's
Shut
what
the
he's
door with
doing.
Katie or something?
Yeah, Katie bar the door is the downside.
Oh, okay.
That's watch out below. Things are about to blow, but load the boat or back up the truck is when you're
Back
thinking.
up the truck's one I like.
And that's what Buffett's doing on this. He's a massive believer in this, and you have to say that with what's happened with oil getting a little bit of a bid back, it was already priced high enough, in my opinion. You could see it from the numbers coming out of these big oil petroleum companies, et cetera, that they're doing extremely well. It is in a 5-wave to the downside pattern now, so you have to respect that's a possibility. But I think oil would have to really tank for this wave 5 to come to fruition. It may, but if you could see Oxy get back above 65, which clearly Buffett thinks is going to happen, it could disqualify this 5-wave to the downside pattern, and you could take off to the upside here. So 65, exactly where it's trading, is the key. I've drawn the line back here. You can see that's been support resistance going back to mid last year, and it's also right where this wave 4 is. So all kinds of activity here around 65. It's above the 10-day moving average. So even though Warren Buffett's been buying it, I would still wait. I would want to see a break above 65. I'm in the Missouri camp. Show me, wait, let it break above 65, and then I think you have a really good upside trade. But the qualified downward pattern, I think, has to be respected, at least for now.
Okay, a good question here from Noah, saying, was it weird that T-notes were dumping and GLD and SLV were pumping?
I'd like to know what everybody else's opinion is on the metals. I talked about my viewpoint that as long as the dollar stays weak, we're going to keep this bid in the metals, but a lot of people talking about SLV and GLD now and all of this. So what's everybody else's viewpoint on the metals? Where do y'all think it's going to go? Is this just the start of another big, long bullish run in the metals, or is it kind of running out of gas? We are at 109% extension here on GLD, but it held 185 today, closing right dead on the 10-day moving average. So I think you kind of want to watch and see how it handles 185, but that almost got you burned here because it jumped, straight from 185 to 190. But 185 is such a point of support now. I think how it handles this is going to be key moving forward. But I think that the correlation exists between the metals and dollar right now, the dollar, US dollar, and that's going to be the key, and really nothing else. The Bitcoin bid, is that because of concern about our currency, the banking system, or is it the halving? What is causing this big run right now in the crypto world? Comment on that as well. I love it when you leave comments underneath the video. And we can interact back and forth. That's kind of what this is about, right? Is to create discussions on the markets.
100%. Now, Lisa's got a question on a stock I've never heard of before. Arbutus Biopharma, HUBB U.S.
HUBB U.S. I'm with you on this one, Doug. So I'm not familiar with this either. It's a lower, wow, when you're dealing with these pharma stocks, especially biopharma down around $3, anything can happen, has been my experience. Now, this one doesn't look like it's been as wild as some. The move's been some decent percentage moves because it's a low dollar stock, but nothing really weird and outrageous has gone on here. So I applaud you for finding one that seems to act a bit more normal. The key here, I think, is pretty easy to see, is at $2.75. That's where all the support resistance lies. The positive side here is that you do have a set of higher lows. You're negative, you're below the 10-day moving average. You did hold the 50-day moving average. So, you know, I usually try to give two viewpoints. One would be more aggressive, one would be more conservative. If you want to be really aggressive, as long as you stayed above 275, I think you could be long. A break below 275, and that's your stop for sure. If you want to be a bit more conservative on this, let it break above 3. Because if it breaks above 3, then it's probably off and running, because that's where the resistance is. And then you could start to go back to, you know, some of these prices that were up in the 4s and 5s if it can get above 3. So yeah, pretty interesting one to look at.
Yeah, it was one here from Jason. He's got a couple stocks, but I'm going to pick on one for him. MSI, Margaret Sam Indigo.
MSI. So we'll take a look at that. Wow, trades on a number of different. Oh, Motorola. Okay. That's not what Motorola symbol used to be, but that's
it's Motorola Solutions now.
Yeah. Was you know, that there was a lot of chatter about Motorola at one time with having some problems, but obviously they've rectified things and moving to the upside here. But getting above 270 was key. That's where the resistance was. And you can see what happens when a stock breaks a point above a point of major resistance. It can really take off. And that's what happened here. It's gone vertical. It's moved to the upside here. And then you've got this big zigzag pattern that looks to be forming. That 61.8 would be the target, is right where that wave 5 projection is. So I think you could see some more upside here, perhaps up to near the 300 level on that, but it is overbought right now. So please note that right now it's overbought from the 10-day moving average. It broke from this consolidation, but it broke vertically. So I would be a little concerned about this vertical move here and the separation. But I think that whether it pulls back or goes sideways, eventually it's going to wind up near 300. That seems to be where it wants to go.
Okay, and the last one we're going to look at is McDonald's, and that's from Will. He said, does it have more upside? And obviously they've been in the press the last couple of weeks as well.
Yeah, and McDonald's is a really good one to look at if you're in fear of a recession. McDonald's, Coca-Cola. We looked at Budweiser last night in our insiders meeting. Same type of thing. You're talking about the Sin stocks. As far as places to hide, and that's alcohol, tobacco, and gambling, but you know, not one of the sin stocks per se, but certainly a stock that if we move into recessionary times and the consumer's tightening their belt, the dollar menu at McDonald's may look better to a lot of people as far as buying groceries. Food prices are coming down, but it's had one heck of a breakout move. Doji today, it's above the 10-day moving average. It's short-term overbought, no question. But that break above 280 was impressive. The question in my mind becomes, how do we handle this overbought condition? Do we just come down to the 10-day moving average? Do we have to come down and test 280 to see if that's support? The way it broke it, because it wasn't such a vertical break, I don't necessarily think it needs to. I think it needs to rectify this overbought condition here. Maybe that's what the doji is signifying today. So perhaps a little bit of a pullback to begin the week. But I think that's another one that you could likely see winding up at 300 in the not too distant future, especially based on all the concerns that exist in the market on whether or not we're going to have a recession or not.
Well, Rob, thank you so much for taking us into the weekend with this great information you've given us. All the HUBB technology you're showing us. It's been a great show.
I agree. Thanks as well, Dux. And I wish you and everyone that's watching a great weekend. Very much appreciate you spending your time with us. And we do our best to try to make it informative and educational use of your time. So thanks, everybody. Have a great weekend.
Don't forget, we're back 5 p.m. next Friday. Make sure you tune in and get those cute questions ready for us. Until next time, have a great weekend.
Take care, everybody.